US production shut in, and yet oil prices wanted to end the week downward. What's your takeaway from last week? You're on mute, Christof. I think you need to unmute again.
Sorry. Good morning, first of all. Yeah, I probably wouldn't have taken a bet either way, but the take on last week is lots of things happening now, especially for oil markets. One, what we have in Texas, you can treat Texas as an oil exporting state, and the disruptions to oil production and exports certainly were big.
The fifth biggest economy in the world, I think, as a standalone or something to that effect.
That's California. California even higher. So not Texas, big, but not that big. But probably under the top 10. But a significant oil and gas exporter, right? And what we had as a consequence of the storm was demand destruction on one side and supply destruction on the other. But the supply destruction was larger. So that would have pointed to a temporary, at least, uptick in prices, and certainly has contributed. And as a result, when things now normalize and the refining system is still stuck, but the crude oil production comes on faster, that contributes to a sort of little bit downturn and normalization again of prices. Then we have a lot of other things going on. So we had the announcement on Iran, finally, that the Biden administration actually is intending to resume negotiations of the nuclear deal. And the way it was phrased, it's in your digest. When people read this State Department brief, it almost puts Iran and the US on equal footing, saying we go back to the status quo ante before Trump, that is, if you do the same. So that's another big thing happening. And then, of course, in the run-up to the OPEC meeting, as you said, a situation where inventories have normalized very, very fast, especially in the US. Still unclarity about some parts of the rest of the world, but where OPEC now really has to make a choice, and it's going to be interesting whether they would repeat the past mistakes and try to go for the money and lose market share. For the last few years, all the growth in oil markets has gone to shale for that reason, or whether they are now willing to sort of increase supplies a little bit and live with prices around where they currently are for a while shale is catching up.
Walter Simpson, Managing Director of CCED, which is indeed an independent oil operator in Oman, with 40,000 barrels a day. And on the end of that long piece of string that is OPEC Plus that has to curtail production, or perhaps, as Christof suggests, increase production. What did you see or hear from last week that would give you some view on a crystal ball where the big decision makers in OPEC Plus may move in 2 weeks' time? Walter, your thoughts from last week?
Well, good morning, everybody. Look, I think it's interesting. As Christof mentioned, the market's recovered much quicker than anticipated. I think realistically, we're looking at to be back probably where we thought we'd be at the middle of the year. Now coming up to the not even the end of Q1 yet. I mean, the only area that hasn't recovered is jet fuel, and I guess that's no real surprise given the constraints on travel that there are. But pretty much everywhere else, the market's back to where it was pre-COVID. And so I think there's going to be a relaxation in production from OPEC on the back of that. And we were already hearing that Saudi are talking about end of April, releasing the million barrels that they've taken from the market. But I don't think it's going to affect the market too much myself. I recognise we had a bit of a spike this week because of the Texas situation. But it wasn't a huge spike given 4 million barrels taken out of production there. And it's dropped back again, but not dramatically back. I mean, we're still sitting around the $60 mark. So,
the markets are closed. I mean, hold on to your seats. No, I'm only joking.
Well, you never know. I mean, in these times, I wouldn't like to say I'm certain, but I feel comfortable that the market's not going to go too dramatically much further down. And so I think we are going to start to see production coming back and supply coming back from the OPEC countries. I think the challenge is going to be how controlled that is. With prices where they are, clearly, as we've talked about before, when economy's hurting, there'll be a desire to get more production potentially back than maybe is desired. And that's where, the comments we've just seen this week from both the Saudis and the Russians about, we need to be conscious of this, we need to be cautious, and we need to think carefully about watching what happens to make sure we don't oversupply the market. So I think with that caution, there is going to be some extra supply, but the challenge will be, again, cohesion between OPEC plus.
Walter, one of the other commentary from last week that I noted was the interview with the Oxy CEO talking about the recovery of shale, and indeed that would be much slower than maybe in previous cycles. I mean, as OPEC Plus looks at that Rubik's Cube, that idea, as Christof referenced, you hold supply back, risk losing market share. But on this occasion, maybe this is the first occasion in a decade when indeed shale doesn't come back. How should OPEC Plus read that recovery in US production?
Well, I must admit, I'm more aligned with Oxy on this one. I think it'll be much harder for shale to come back to the levels it has been pre-COVID. Now, why am I saying that? Very capital intensive business and recycles capital a lot in order to be able to keep those wells producing. And I'm not sure that in the present market that access to capital is going to be there, either because of availability of it, if you want to borrow it to the oil and gas space, that's tougher at present, but also for the majors that are getting involved, they'll be looking at investing their limited resources elsewhere, I think, in oil and gas production, which is a better return, simply. You look at the majors, particularly the European majors, where they're starting to invest in the renewable space, and that's a big chunk of money. So it's got to come from somewhere, and I suspect it's these kind of areas in shale that it will hit. So I think there is a good chance it won't come back to where it was, and I suspect that's what OPEC are thinking too.
Christof, sorry, go ahead.
Can I just respond?
Yeah, please.
Because I think there are several myths which we have to be very careful about. I'm glad I note that the discussion has shifted from shale is dead a few weeks ago to now how fast is it coming back. But we should.
Well, at $60 a barrel, it obviously has a heartbeat.
Well, you know, people predicted the end of the industry just because of some financial restructuring, which usually improves the productivity in the US, and that's what's happening here. In addition, we should not be aware that there are different mechanisms in which shale is annoying to OPEC. Number one is what we just talked about, just simply production going up. Number two is the ability, if there is only a short-term price spike, to hedge production. That was very effective in years past, explaining why this ramp up and these high levels of output persisted. So OPEC doesn't really want to risk, even 2 weeks of $75 oil, because that would lead to a wave of hedging, and shale producers make it comfortable for them to increase production for a year out or so. And number three is the drilled but uncompleted wells. What shale guys do when they have nothing to do is they prepare these ducts, they drill but don't frack, and that has an even faster response time to higher prices and bringing the oil onto the market. And the numbers there have gone up considerably as well. So I would be very cautious about the short-term reliability of shale. I think it's still there. And as to the majors, the European oil majors, that is correct, that they will invest less in oil and gas if they make true on their promises. In the case of BP, we have published numbers. They said we will decrease oil and gas production by 40% of what it was in 2019 by 2030. But the big IOCs, they are just less than 15% of global oil supply. And all that means is that customers in Europe and the US and Japan and Australia at some point will turn around and find out that their entire supplies are provided by the Gazproms and Rosnefts and other state-owned companies of this world. Whether they will like that or not, I leave to your imagination. But that's the only effect. This will not mean a decline of significant magnitude in global oil markets, because the slack can easily be taken up by small independents, such as Walters perhaps, and in the US, and by state-owned companies. So I return to this old story. There's a short-term adjustment process, but a long-term problem. Long-term, we are resource abundant. Long-term, I don't see the beginning of a new super cycle in oil.
How do you interpret last week as we started out our conversation? I mean, 4 million barrels knocked off from the US production and inventory decline, and yet the instinct of the oil price was to decline, end the week on a downward move, WTI breaking below 60. What's your takeaway from that, Christof? What does that tell you about tomorrow?
I think it might go down a little further, but not much. I think it was a reaction to a very steep run-up in the last week or so when it crossed 65 in very fast order without anything major happening. And now what we have is Texas normalizing and anticipation sort of shifting that the OPEC meeting will actually result in a production increase. I don't know, but I would guess that a large part of the market is thinking that way. Maybe the majority of participants is thinking that way. And then markets always trade the future. So you have this dent a little bit going ahead. What is at least as interesting as these short-term duration in the crude prices is the short-term durations in the share prices of major oil-producing companies. And here now, for the last few weeks, we have finally seen something which I was sort of waiting for a long time, which is a price increase of everybody, from the BPs and Shells, despite their renewable pledges, to the Exxons of this world, and a steeper increase by those who want to produce oil and gas than by those who want to pivot into clean fuels. So Exxon and Chevron did better than Shell and BP. And I think that tells you about the anticipation of the broader market, about the long-term stability of the oil price. And I'm saying stability consciously because an oil price of 55 or 60 with the cost adjustments which that will generate over longer periods is enough to make these big oil companies attractive if you believe in a future for oil. And that seems to be happening, and that seems to be, if I may say so, a fairly safe bet at the moment, even if prices stop rising.
Walter, believing in a future for oil, one obviously keeps the sense of time horizon on that. We had last week also announcing the Egyptians launching another bid round for 24 oil and gas concessions. We're seeing obviously the opportunity and perhaps the window for additional new supply, new production, not just letting sort of returning idle supply, but the idea of adding new production supply. What do you think the outlook for that is in the region, given the outlook for price trajectory?
I think there's going to have to be new supply added, if I'm honest. We've had almost a year of very little investment, and that's going to have an impact going forward. So I think there's going to have to be some new supply added. I think there is some optimism, as Chris said. I think there is, the future price, oil is going to remain a significant part of the energy mix for the foreseeable future. I don't see how it can do anything else unless there's some dramatic technology change. And so it's going to be part of the energy mix, and we're going to have to keep that supply going. And that's going to require investment. And I think you're right. I think we are going to see a move away from the international majors investing in the oil and gas space to the smaller independents and the national companies. And so I think we are going to have to see that new supply coming in order to bolster that drop. Because I think demand is going to stay at reasonably high levels for certainly the short term and medium term anyway.
And is that something your own company would be looking at and considering?
We're always looking at opportunities.
Always looking at opportunities, exactly. There's another well to drill somewhere. There's always another opportunity. Christof, looking forward to the week ahead, what do you see out there that could be guiding this massive stimulus package still to drop from the United States? You've sort of made the point in recent times that Larry Summers and others cautioning against inflation. What are your own thoughts on the outlook for that new stimulus?
That's quite a question. So first of all, in general terms, next week on the surface looks pretty quiet. A lot of economic data from Europe, like GDP in Germany and all that. That will be some market moving elements. One big thing in the vein of what you asked is I think on Tuesday, Powell, the chairman of the Federal Reserve, will testify. And that should be watched very closely because he will, of course, trying to dispense these worries about inflation. But stepping back from that, what we have is indeed worrisome. So we had these discussions that the stimulus package will give an inflationary boost because it's so much larger together with these accumulated savings than the losses from COVID, while the productive capacity of the economy has not improved over the last year. So there's a wave of demand and money hitting a smaller capacity, and that's likely to bring inflation rates up, with the Federal Reserve saying we don't really care even if it overshoots our target because we first want to generate a red hot labor market. These are all ingredients which sound weird and which will create troubles in the long term. The important element for those worried about this to keep in mind is that it's not up to the Fed necessarily how far inflation goes. It is up to bondholders. And what we have seen is that bondholders have started selling long-term US government bonds. And so the interest rate for 10-year bonds is sort of is ticking up. And it's that increase in interest rate which has the potential to translate the threat or fear of inflation into a economic or financial crisis in stock markets.
If we take the assumption that the central bankers are clearly signaling that they're going to have a lot of tolerance for, inflation or prices rising, what are going to be the ramifications for that, in particular, do you think, for the oil markets?
In stock markets and financial markets in general, there will be volatility, but it doesn't need to be a disaster. When you think of inflation, a natural hedge is to invest in shares. So period of high inflation and high growth, which we're entering, would not be necessarily medium long-term bad for stock markets. Similar for oil investors. Commodities are a natural hedge for inflation, so you'll see more flows of investment going in there. And as long as this inflation is sort of on the surface and combined with real economic growth, it increases demand for oil and will therefore increase the profitability of countries who can calculate themselves how much of it is real demand, how much is inflation. So that's not a short-term problem. The problem with inflation is twofold. There's a creeping instability in the long term if the rates are not contained but creep up. Planning horizons shorten, people can't make right allocations and decisions anymore. And that creates real significant economic problems. And the other one is that if it comes too suddenly and comes as a surprise, or if anticipation is running ahead of the real event, which seems to be happening, then you will have a short-term rise in interest rates, which can create all sorts of unintended consequences. I think we are in this scenario of a slow uptick of inflation, maybe some financial instability, but not a disaster yet.
Walter, looking forward, obviously demand outlook remaining strong for Middle East producers, Oman producers, China and Asia demand is quite critical. What's your own window on that? Does it look like it's remaining quite solid?
The simple answer to that question is yes. It seems to be at present. I'm relatively comfortable this year with the recovery we've seen so far this quarter. It's ahead of where I expected. So I'm optimistic, I would say, about that this year. That's always a dangerous thing to say, I know, but I am optimistic. So yeah, I think it's looking pretty good, to be honest with you.
Let's go to the room and get their views on the direction of markets in the coming week, given where things ended last week with our survey question looking to, are we going to hit 60 next or 65? Which is more likely, as Brent sits now at 62 and change, having been above 65 last week? Can it reclaim 65 in the coming week, or is it more likely to touch 60? What's the view of the room? Which of these two are more likely? Of course, neither might be as likely as the outcome as either one of those, but that wouldn't be as much fun. So let's see, 60 or 65, what's the view of the room for the direction of the market next week? Christof, looking forward, we're obviously 2 weeks out from the next OPEC meeting in which policy and output will be decided for the second quarter. We have a story actually on Bloomberg this morning indicating, and of course that might be the nature of the news, that there is not perfect alignment between Saudi Arabia and Russia like a year ago, not quite as severe, but indicating Russia's looking for more barrels, Saudi's expressing a lot of caution. How do you see those two things being resolved in the coming 2 weeks?
It's the same old story, with Novak being on record saying if we don't increase production, somebody else is going to do it for us in a longer time horizon. And the Saudis saying, okay, we do whatever it takes, so to speak, to get prices up more rapidly, despite all the talk about stability. I think they will have no choice but to get on the same page again, even if it's shaky and sort of limps from meeting to meeting. I think the publicized discussion between Putin and the Crown Prince was preparing exactly that. And I think they will find it. Remember that we have these high prices also, not just because of some stellar demand recovery, but also because they went ahead and slowed down the originally planned cuts and had extra cuts from Saudi Arabia. So in that sense, OPEC Plus went into delivering something which they didn't have to do, and so now it's time probably to cash in on that, and for the Russians to take it easy and to say, okay, we let you increase a little bit. And so I would expect an announcement of an output increase, and that is also what colored the sort of reluctance of oil prices to keep on surging this week.
Walter, there does seem to be an uncertainty in the market as to the Saudi 1 million barrel a day extra cut that was made for February and March. And the market is sort of waiting for guidance as to when is that coming back. But there's other indications saying, hey, don't wait for guidance. This is coming back. It was only meant to be 2 months. I mean, do you think that the OPEC Plus group has to sort of facilitate Saudi to bring that back before everybody else gets to add some extra barrels? Or do those two things happen together, do you think, in the second quarter?
Oh, that's an interesting question. I think that production needs to come back. I wouldn't like the oil price to creep up too far. To me, a stable price around 60 is good for us all, if I'm honest.
Right.
And so I don't want the market to get short of supply. We've seen inventory levels back to where they were. It wouldn't take much. I mean, if you've got sudden, vaccines come in, air travel returns, we're going to need that production. Never mind like it, we're going to need it. So I think it does need to come back. And I think the end of Q1 is probably good timing for it. And that's my expectation of the meeting.
Why is the timing good, do you think? Because
what we're starting to see is that recovery. We're starting to see that the draws from inventory are reducing those levels. It's actually quite a fine balance, I think, on the demand supply side at present, and it doesn't take much recovery in the economies to drive that to negative. So I think that coming back is going to be important.
Let's go ahead, Christof.
Yeah, I agree. All signs are for this. And to your question, I mean, this was a unilateral promise by Saudi Arabia. So if I would be a Russian or somebody else, I would have to accept that the decision to extend it or not is also a unilateral decision before anything else is or on top of anything else being negotiated. But the risk of a price spike is obvious and clear with respect to the shale response. The risk of the still nascent economic recovery, you don't want to kill it off with suddenly very high prices. I think it all points to a relaxation and a return to the normal schedule. It may even surprise us on removing more cuts than we thought and really return to the original schedule on the grounds that this would give an additional medium-term boost to the economic recovery and therefore would result in higher and stable prices later on without letting shale into the back door. So that would be a smarter thing to do it. Right?
I wanted to get your comment, Christof, on the announcement out of Mexico that they were going to spread their hedge position across the whole calendar year, rather than previously, whether they would have squeezed it into a few months. Is that a big deal? Not a big deal? What's your take on that?
It's overdue. It's smart. So what has happened, for those who don't know, is the biggest oil hedge in the world is the state of Mexico hedging its oil production every year. And they do it every year for next year. And they do it in close negotiations with a handful of, I understand, more or less always the same players on the other side, big banks and big oil companies taking the other side of it. And they are afraid that this sort of creates a market ruckus and that news leak out of where they stand on pricing, and so that individual traders will move ahead. Whereas other smaller players, shale players in particular, they spread their hedging across the year and they do it on a case-by-case basis, making use of short-term market durations and without affecting the market so much. So Mexico decided to switch to that model provided by the shale producers. To my mind, number one, it makes sense. Number two, it's interesting that they continue to do that, even though the results have been positive, but not always. That this year the ledger is positive because of a big payout last year, but it's not always the case. And number three, I think that it just points out how markets become more and more commoditized, and that is something which we might see more often, in particular as these, and that's an interesting thought, I think, these European oil companies, which have traditionally been oil companies and not hedged because the argument was our shareholders want exposure to the oil price. As they now pivot into the energy transition, they may be tempted to, as they scale down the oil and gas production, to hedge it, to have planning.
That would certainly be interesting.
And to deal with the lower revenues from the renewables they're going to be exposed to.
Let's go to the survey result before taking the last word on the outlook. What price is Brent more likely to hit in the coming week? 60 at 2 to 1 against 65. Walter, your outlook for the week ahead, what might be, you think, directing the markets? The recovery in Texas would seem to be a big one.
Absolutely. It's how quickly that comes back, is a simple answer. And maybe not even necessarily how quickly it comes back, but how quickly it's going to be perceived to come back. And the news on that, I think, is going to be important.
Yeah, I think that's true. And also the exports, where there's the U.S. ability to export oil and gas, how long term that is impacted. Christof, your outlook for the week ahead.
Well, Texas it's interesting because it seems that the downstream, the refining business, takes longer to come back than the upstream business. So that should have implications for the spread between WTI and Brent. The outlook for the week ahead is the economic data from Europe could, go either way. The nervousness in the market around the increase in interest rates and long-term U.S. interest rates. And to me, for the first time in a long time, this Powell briefing is something to what normally I'm not among these Fed watchers. I find this boring, but just like the Riyadh watchers. But this time he will have some explaining to do, because the front of those economists who really supported the big time stimulus is evaporating pretty quickly. It's Larry Summers now, also Blanchard has distanced himself, the ex-chief economist of the IMF, and even someone like Krugman is sort of taking refuge in the completely political realm, saying, okay, it has to be done right now. So we have a situation where the politics say the stimulus has to come just to put a stamp on the map.
Yeah.
And his own economic supporters say, oh, it's going to come, but it's going to cause a problem.
Yeah, it's interesting. The political, it's like sort of following through with the election commitment, if you like, which also include, I think this perhaps might be the first session we've had in close to a year where we haven't mentioned the word COVID, which is maybe in of itself a reflection of where the world is at the moment. But nonetheless, it still does remain a significant challenge, and the vaccination rollout, the speed of which is going to be different in every place. Clearly, we're seeing that already in Europe, multiple tiers of progress, which in itself will have an interesting impact on the outcome of that. You can travel here, but you can't travel there. Nationalities from this country are welcome, but these other nationalities are not. And very importantly, it does seem to be growing momentum, is vaccination passports, which I think is going to become, or certainly the narrative around it does seem like it is going to be an established reality by the second quarter or into the summer. So vaccination passports, something to look out for. But those are some thoughts. Christof, thank you as always. It looks like the daylight is a little bit brighter in the mornings there in Germany. So the spring is coming. Walter, thank you so much joining us from Muscat. Have a great week, everybody. Economically productive and safe week, and we'll catch up with you in the coming days. Thank you very much.
Thank you.
Thank you, Sean.